And then within this zone, we have 30 towards 70. So traders base on this analogy to understand that if I want to know where I can make entries or where I can be able to go into the market, just observe to know where there will be price reversal, where there will be price continuation. And this is all about trading. In trading, your responsibility is to know where there is going to be expected to be price reversal and where it is expected to be price continuation. So within these two zones, as we are going to study this, within these two zones, we realize that from 30 to 70, we have 40 to 60, right? 40 to what? 40 to 60. So traders perfectly make considerations that if the price is within this region, that is from 30 to 0 or 0 to 30, I may consider this place to be at the oversold zone, right? Where if I'm a spot trader, this is where I prefer to go and make decision, because at the oversold zone, the price is considered to be the price is considered such that it has been sold excessively. And after something has been sold in our previous lessons and understanding, if something is sold excessively, the next thing you will realize is the price is cheap and more buyers will begin to do what? Begin to jump on it. Likewise, when the price is also expensive, more people or more people will begin to do what? Sell it, because now it has gained more momentum. The price is very high. Is that clear? So if at a point in time I'm a trader and I consider using the RSI, I may prefer to use the RSI because I want to identify a zone where price is expensive and also another zone where the price is very cheap to use. Hope that is clear. Hope that is clear. Hope that is clear. Hope that is clear. Very good. Very good. All right. Now, please a minute. A minute. All right. Sorry, let's proceed. Okay. So, how can I stop sharing? Okay. So using the RSI, what we are saying is considering the various factors, that is the oversold, then the overbought, you may learn to know that within this region, that is 0 to 30 is considered oversold, and then 70 to 100 is considered overbought. Now, from 40 to 60 is what we have the neutral zone, and then also the buying or the entry zone. So, for instance, if it has been that price, so within 40 to 60, we have 50, right? 50. So 50 is considered as a neutral zone. Below 50 is considered as an entry zone. Then also above 55, 60 is considered as what? As a buying zone. Why? Because when the price gets to 40, below 45, 50, 45, 40, it seems the price is getting heading towards the 30 zone. That is the oversold zone. Then also from 60 to 70, this place is considered as a buying zone, because at this point in time, or at this moment, you realize that the price is heading towards heading towards the buying zone or the oversold zone. So within traders consider these two things. 50 is considered as a neutral zone. It is neutral. When price gets to the 50 zone, that is neutral zone. But below 50, sorry, but below 50, price is considered at a very good zone to do to buy or sell. Sorry, if it's below, that is selling zone. If it's above, that is buying zone. So if I'm a trader may consider that this zone, since price gets to 40, the next thing I could see is price could do what? Could drop further, right? And then also, if price gets to 60, it's possible, highly possible. We are talking about possibility here. By the trading and market analysis is all about what? Possibilities, right? So since price gets to 60 zone, the possibility that from 60 is going to 70 is what? Is very high. And then another trader also consider, okay, since 50 is the neutral zone, from 40 below, the probability that the price could drop further is very hot, it's very high. So using this chart, this is how traders mostly make decision, using the MACD, sorry, I said MACD, the RSI, overbought and oversold conditions. So mostly, if I'm a trader, let me use, I don't know if that line is okay, or I should use this. If I'm a trader, let me click this and then use that one. Okay, good. I think this may help. Now, if I'm a trader, what could help me further is, I know this is oversold, this is overbought, right? Now, let's assume this is 60, this place is what? Is 40. So in between this zone is what we term as the what? As the neutral zone. That is the 50. What is the in between 40 and 60 is what? Is 50. That is the neutral zone. Because over here, if within this region, price could either continue back to its uptrend, or it could continue further to its downtrend. So for you to make an decisive decision that, okay, then at this point in time, I could easily identify that price is going further to the selling zone. That is, when the price has gotten below or has gotten to the 40 region, right? And then also when the price has gotten to the 60 region, within these two zones, trader may be able to get a confidence enough to understand that, okay, then there may be a price continuation. Okay. I don't know if you get it. Let me know if you get it. Do you get it? Because this place, that is the 60 zone, it's highly possible price may continue. But when it's within the 50 zone, it's either it may go below or it may go up, right? So traders are considering to know either price may continue the uptrend or it may continue the downtrend. So the perfect entry on when someone is making a decision to use the RSI at the 40 zone, that is where traders decide to do to sell. That is if it is short to short. Then at the 60 zone, that is where traders decide to do to long. Let me know if that is clear. 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 Is that clear? Is that clear? Is that clear? One say not yet. Not yet. Is that clear? Let me know from your side if that is clear. If it's clear, let me know if it's very clear, right? You know if it's very clear. So, all right. Okay, so very clear, very clear. No, please. Okay, so I was saying no, please. All right, let's proceed. Okay, so what we are saying is simple. What we are saying is very simple. I don't know why these things keep hiding up here. Let me unshare and reshare. What we are saying is very simple. Consider the RSI. RSI is also one of the commonest, the common, and then also the easiest indicator to be used. Okay, so the language is simple. There is a line. There is what a line. Okay, this is the line, and what we are saying is the line. So let's assume this is 30, this is 0, this is 70, this is 100. Okay, and then we have in between, this is 40, this is 60, 60. So in between 40 and 60 is 50, right? In between 40 and then what and 60 is what is 50. Okay, so when we consider these two zones, what we could clearly get is that if I'm a trader and I want to make a decision in the market, okay, if I make decision within this region, that is the 50 region, when the price is neutral, I may make a wrong move. I may do what? I may make a wrong move, right? Why? Why will I make a wrong move? Because at this point in time, the price could either go up or go down. It doesn't make a decisive decision yet. There is no fixed decision here. The probability is very weak, right? It's on it's not certain. Let me use that word. It's not certain. But if I wait enough for the price to get to the 40 zone, the probability that the price could go down further is high. So from 40, I know it will go below, that is 30. And also, when I consider 60, when the price is at the 60 zone, the probability that it could go to 70 is very high, right? So if the price is within the 60 zone, the probability that the price could head towards the 70 zone is high. And also the probability that the price could head towards the 30 zone is also high when the price is at the 40 zone. Now, a trader may consider, since 70 is the overbought, it simply means when price gets to 60, 70, 80, some traders may decide to exit. That is the exit point. 70, 75. 80, then people are exiting out of the market, because from 60 to 70 it's buying zone. You've made your entry. From the 60 zone, 65, you made your entry. So 70, when the price is heading towards 70, 75, 80, you'll be in profits. So most traders using the RSI to snipe the market, right? Also, when it's below this, that is 30. When it's 40, below 40, 39, below 35, 30, that is where trader begins to see opportunity in the market. So 40 have made entries in the market. Now below, if it gets below 30, that is even a bonus for me. And it's too much profit, right? So in same manner to when it gets to 70, 80, 85 and beyond, realize that now there is too much opportunity, and these are the conditions. So these are the conditions with RSI. At the overbought zone, there is a probability that price may reverse. Price reversal. Now, listen, it is not 100% sure that the price may reverse. It can also continue, right? It can continue. But mostly, we all know that when demand is too high, it creates out supply. And when the supply is too high, it also creates what demand, right? So at the overbought zone, you see now a lot of people are making money here and they would like to sell because they've made profits, right? They would like to do to sell their assets because they've made profits, and as they begin to sell here, the price reverses down. Sometimes to back to 60 zone to rest before it continue again, or sometimes it get back home for once and for all, and it never returns back to the top again. So likewise to someone using this zone, the price got further 30, 20, 10. The probability that price could reverse back is high because now the price is very cheap, and now people will prefer to buy that asset at a very cheaper price. So for instance, a typical example is recent happening. Looking at BTC fell through last week. BTC fell around 100 and what 100 and what 109, is it? Yes, 102, 103 thereabouts, and it's not rising. Today we are seeing still maybe the price could push to 115, or I actually don't know the current price, but yesterday when I did the analysis, it could push to 115 and beyond, right? So if you consider this, you realize that traders always make decision because where they make decision based on where there is more momentum, where the strength is high. So that is the reason why we are saying with RSI identify that is the strength of the market. Either is having a weak strength or a strong strength. Is that clear? Let me know if that is clear. Let me know if that is clear. Let me know if that is clear. Yes, we will do that. Let me know if that is clear. Let me know if that is clear. All right. So now let's go to the TradingView app. Let's go to TradingView. Let's go to TradingView. So all right. So now, let's add indicator here. So let's turn off the Bollinger Band. Okay. Or better still, we can use it. Right. So you click on settings. Yeah. Let me first swipe off this. So you click on these three dots, then we click on what indicators, right? So after clicking on indicators, let's see, we search for RSI, relative strength what index, relative strength index. So we click on it nicely. Okay, so let's tap on it. Good, good. So when you come here, let's click on settings to observe, right? So click on style. So the RSI is what is indicated as the what? Um, the is it violet or which color is this? Let me use blue, right? So okay, so let's turn off this and then consider only this one. Okay, so this is the RSI, right? Good. So you could see that from it's below. Look at it. This is 30. This is what? This is 60. Then this is the current zone, that is 48. Right. So when you look at this zone, you could this is RSI, this is 30, this is 48, and then also this is 60. I guess you can see. So looking at the current line, you can see that it is on the 48 zone, right? It's on the it's on the 48 zone. So the more the price goes up, the more it comes down. The more it goes up, the more it comes down. You could realize that the price may be ranging based on a particular line, which is either 30, 40, 50, or whatever zone it may be. You may find it. So using the this thing, the moving sorry, the RSI line, you could clearly see that this is on the what, on the 48 zone. So what we are saying is that when the RSI line fall above 50, that is 60, we could say that it is at the buying zone. And then also when when the RSI fall below or fall on the 40 and below, we could say that it is on the selling zone. But once it gets to 30, 30 and below, we could say that it is at oversold, oversold. And also when it gets 60 and above, we could say that when it gets to 70 and above, we could say that it's what it is overbought. That's clear. Hope that is clear. Is that clear? Let me know if that is clear. Let me know if that is clear. Let me know if that is clear. Okay, so very good. All right, that is awesome. Someone is here. Repeat, 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 repeat on the 48. I Well, let's proceed. All right. So, getting back here, the lesson is simple. This is the RSI line. Oh, where is it? This is the RSI line, right? Now, this is 42. away from this. This is 42, 45, 47, 48. So you could clearly see on the you could clearly see that this is on the 48. This is 48.72. This is 50, right? This is 52. This is 55. So when you are using the RSI, this lines has already been indicated with a mark on it, and when it falls on a particular line or zone, you could clearly see that this is either on the 60 zone, this is on the 70 zone, or on maybe on 100 zone. That is what will give you the confidence to know either the assets are the oversold zone or overbought zone. This is very simple. It is not anything difficult. It isn't anything difficult. Is it difficult? Is it difficult? And at a point in time too, we will get back to study how to use the coin glass to identify. And that one, it even simplify it very better and easier as compared to this. Is it difficult? Let me know. Is it difficult? Uh, is it difficult? Is it difficult? Very good. Very good. Very good. Now, let's look at the last part of it. Let's look at the last part of it. Now, when it comes to RSI, not only do we use the RSI crossovers or the overbought and then the oversold, we have what we call the divergence. Okay, the divergence. So when we talk of the RSI divergence, okay, so we can use the overbought and oversold, OB and OS, the overbought and oversold, to make decisions based on how prices goes either above or below, right? And we also have what we called the divergence. So we can also use the divergence to make decisions. And when we talk of the RSI divergence, it's just the price, okay? How price action or how price reacts following the RSI. So basically, when we talk of the divergence, we have what we called, and I may not go further because we've not studied or discussed on have discussion on that lesson. Mostly, we have what we call price reaction or market structure, how price goes up and down. That is higher high, higher low, lower high, and then also lower low. Okay, so the formation of price on what on the chart. Sometimes price goes up, sometimes price come down. So how traders also interpret the RSI is this: traders mostly uses the high and then the low of the chart to consider how RSI to do or to also react. And this is something brief about that, about the divergence. So let's look at that too. So mostly what the RSI does is simple. When there is a higher high, okay, or ukwano, what the kind Rebecca? What the kind Rebecca? Okay, all right, sorry. So let's proceed. Okay, all right, let's proceed. So mostly divergence happens when there is disagreement between the prices. So for instance, the price is forming what a high and then also RSI is also going down, right? So when the price is going up, when all price seems to be going up, and then this RSI seems to be going down, that is when we say that there is divergence. Or when all price seems to be going down, and then RSI seems to be going up, that is when we see that there is divergence. So basically, when we talk of RSI divergence or divergence in RSI, it's about how prices disagree with each other on the chart. So if price intends to go up or forming a higher high, and then also the RSI intends to go to the oversold or the overbought zone, that is where, sorry, the oversold zone, that is where we see that there is RSI what divergence. I don't know if that is clear. Is that clear? Guys, sorry, we don't go deeper into that. For now, we are going to use the overbought and then the oversold. I don't know. Is that clear? Is that clear? Mm. Auko. What do you mean auko? Huh? What do you mean out? Okay, so someone is saying it's not clear. It's not clear. It's not clear. All right. Okay. Now listen. Listen. What we are saying is simple. Just trying to simplify something clear to you, right? What we are saying is the RSI divergence. Good. So basically, the idea of RSI divergence is simple, that whenever there is a price change, RSI does not react to equalize or to equate the price changes or the change in price. Okay. So for instance, the reason why I'm not going to talk about the highs and the lows is that we've not studied much about what price action. Okay. So we are talking about indicators for the meantime. We will do that soon. Right. So over here, when we talk of RSI divergence, what we mean is that sometimes there is disagreement between the price and the RSI. And this form of disagreement gives traders confidence to know where they can be able to make decision, right? So for instance, when it comes to the use of RSI, when it happens that RSI divergence happens when the price, okay, and then also the RSI itself disagrees. And how does it disagree? For instance, what we are saying is the price may form a high, okay, while RSI may also form what a new low. So whilst price is forming a new high and then also RSI is forming a low, that is why we say low. It's heading towards the oversold zone. Meanwhile, price is going up, or you may see the candlesticks going up. At that point in time, we may say that there is RSI divergence because the price reaction does not agree with RSI. I don't know if you get it. So both in up either oversold or overbought, when it happens that the price reaction does not agree with the trend to which RSI may be following, we may say that there is RSI what divergence. Let me know if that is clear. Let me know if that is clear. Let me know if that is clear. Is that clear? 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 All right. So that's the reason I'm saying that I'm not going to go deeper into that aspect because we've not stated about that's the reason I'm saying that we may not go deeper into that, right? Why? Because we've not actually stated market structure, right? How price form swings are high and they swing low. We've not stated about that. So that's the reason why I intend to hold on. So it's very simple. Now, let me see. Now, so price, let's assume price makes a lower low. Okay. So there is a lower low on a price. Instead of RSI to react to the trend, you may see RSI maybe forming what a higher low instead. In that case, you may realize what we may say is that there is RSI divergence, and with that, it's the trend. This line is what we are talking about. So while the price keeps going down, or even though the price is going looking at the actual trend, the price is going down, yet RSI seems to be slightly going up. In that case, you may see that there is divergence because the price, instead of the price going down and the RSI to go down, it seems slightly to be going up, not like it's going too bullish, but instead it seems to be going up. In that case, you may see that there is divergence. And sometimes when the price is forming a higher high and the price is going up for RSI to also go up, you may see that the price is going down. In that case, you may say that there is a divergence. That is all what we are saying. But for now, what I'm saying is let's focus on the overbought and then what the oversold, which intends to give a fixed meaning because for now or right now we can see that we understand the oversold and then the overbought as compared to the price action because we've not stated about market structure, right? So for now, consider the overbought and then the oversold, where price reacts to the oversold region and also the overbought region, and that will be the easiest way to understand the lesson. Is that clear? Is that clear? Is that clear? Is that clear? Simple as that. Simple as that. All right. Very good. So I guess the concept of RSI is very clear. I wish we would add stochastic RSI to the lesson. I wish you would add stochastic RSI, but it seems adding two indicators per session may be a little bit stressful for a lot of traders. And I want us to take the lesson bit by bit. But I wish we would have added stochastic RSI to the discussion of RSI once and for all. Then tomorrow we proceed to another indicator. But I think it will be too stressful for a lot of people. So we would end here. But then I'll give you the opportunity to ask question. If you have any question to ask, I'll give you the opportunity to do or to ask a question. If there is any question to do, if there is any question to ask, I'll give you that opportunity for you to ask your question so that I help with an answer. Okay, so we would rather hold on so that we wouldn't complicate anything or confuse a lot of people. So we will rather end here. If you have any question, please ask based on what we've discussed about RSI. If you have any question, please ask. If you have any question, please ask based on what we've discussed about RSI. Okay, so I can see two hands up. Jacob. All right, you've been asked to unmute. Ask your question, Jacob.
Coach,
Morning,
I would
presenter.
like to.
Okay.
All right, Jacob. So Jacob, you're on the line.
Yes, Coach. Can you please go back on the TradingView? and show us how to find the RSI, because the concept I've understood it, but how to find it from the trading view, that is where I've got lost somehow.
All right. So over here, let's go back to TradingView. Let me delete this. Okay. So now we said when we want to get the indicator, all indicators can be found in the same, in a common way. Click on these three dots here. These three dots, click on it. Click on these three dots. Now, after clicking on the three dots, click on indicators. Okay, indicators. Then search for RSI. RSI. Right? This is it. This is RSI. Relative Strength Index. Right? So just tap on it. Just tap on RSI. Once you tap on it, just come here. You will see this is the RSI. Basically, it also comes with a short moving average, but just ignore. So you can tap on RSI or the settings. When you come here, you can see RSI based MA. Oh, I believe you can see that. We have the RSI based .MA. So
Yes.
let me, very good. So I'm coming. I want to get the pointer right. So okay. So this is the RSI based MA. So you can choose to turn that one off. You can choose to turn it off, right? And then you focus on the RSI alone. So you click on OK. So this is the line. This is what we are talking about, right? This is what we are talking about.
Thank you, coach.
All right, you're welcome. Okay, so the next person, let me see. Okay, so Godson, you've been asked to unmute. Ask your question. Godson, you've been asked to unmute. Ask your question.
Good morning, presenter. Good morning, house.
Good morning.
Happy Monday and the rest of to everyone. Please, I want to ask a question. When RSI divergence happens in the market, what is the trader's confidence? That's my
All
question,
right.
sir.
All right. Okay, so now when RSI divergence happens, it tells the trader, or it's communicates the trader for the trader to understand that either he is supposed to go on bearish or bullish, especially after understanding the highs and then the lows in the market. So if I'm a trader and I understand market structure, how price forms a swing high and a swing low, now when I see that the price is on a lower low, yet RSI is forming a lower high, or I will be able to know that okay, then it is bullish. So I have to get prepared. Or when the price is forming something different, I'll get to know that it is bearish. So I have to do what? Get prepared. So in any part of the trend, either it's forming a new divergence, which is a bearish divergence, or a bullish divergence, it's still communicated to the trader as the name goes. If it's bearish divergence, the trader may know how to when to short the trade. If it is a bullish divergence too, the trader may know when to long the trade. Hope it's clear. Hope it's clear.
It's clear. Thank you.
All right.
Just to prepare traders' mind on what to happen or to happen next.
Exactly.
Yeah, thank you.
You're welcome. All right. So, is market session important to crypto trading? Yes, of course. Is market session important to crypto trading? Yes, of course. Market session is important, but it is not something too important when it comes to crypto trading itself, right? But the other side of crypto trading, like those who trade on the forex market, you trading crypto on the forex market and stuff, mostly it's very, very important to them, right? So market sessions are important. Market sessions are important, and they also add volatility to the market as well, especially when it's open. So it's important. But the honest truth is it is not 100% as compared to the forex market, right? Not 100% as compared to the forex market, because the crypto market is 24/7, right? The crypto market is 24/7, and sometimes some of these market sessions are being closed. So when it comes to crypto markets, market sessions are important. The time, the opening and the closing of those market sessions they also add a little volatility to the market, impact traders' confidence and stuff, but not 100%. That is what you need to know. So, Christopher, I hope it's clear. Christopher, I hope it's clear. All right. So, Christopher, I'm still waiting for your response if it's clear. So, good morning, sir. Please, how can I get extra teacher to teach me because I'm a slow learner? You want to go for extra classes? You want to go for extra classes? All right. So, you tag me on the platform. Your case will be discussed. Tag me on the platform. So what we are going to do is we would get teachers who would assist if there is any. We will discuss that if there are teachers who would assist you to get your personal session done as maybe you preferred to be discussed. So you can tag me on the platform. All right. So please, if there is any question, you can feel free to ask. Now, one thing I would say is in regards to some of these things, this. Personally, I don't have problem with you going for one-on-one sessions, and you should be also mindful when you agree with the person that you have to pay something, you must be willing to pay, and the learner or the tutor must also be willing to honor due service, right? That is our policy. So there is nothing wrong with going for a private class or one-on-one session, right? One-on-one session may surely come with T and C's, to which if you are willing to follow, that is your personal choice, right? Because at a point in time, every trader wishes that, okay, um I want to, or I prefer to go pro or go advanced. That is your choice. And I'm not against all those things, right? But what I'm against is after it backfired, don't get to anyone. That is the rule. Don't get to anyone because you made a personal decision and you must be willing to pay the price for it. In as much as that, we don't want confusions, right? Okay, but that doesn't mean that no one can go for one-on-one session. That one is your personal choice. Okay, so let me see. Um, Good morning. Really appreciate your time, but my question is not directly related to this presentation, please. How can I find the continuation of your presentation on how to identify and trade support and resistance? So please go to YouTube, our YouTube channel, that is Royal Care Revolution. I handle that session and search for support and resistance lesson on that, so you may be able to get access to it. I would like to be added to the WhatsApp group. I would like to be added to the WhatsApp group. I don't know how you manage to get the link. Michael, I don't know how you manage to get the link. So, Robert, maybe we'll search for it and then also. Yeah, so kindly, the person who shared the link with you, chat the person. The person would help assist you to do what to get the link, right? To get the WhatsApp link as well. So the person who shared with you would assist you to get that. Okay, so thanks for the lesson. Very useful session. All right, so thank you too. So I believe there is no other question. I believe there is no other question. So Michael, I may not be able to tag on your number to chat you privately. So I urge you chat the person who shared the link with you. The person may assist you. right? All right, so guys, we will end here. We will end here. If God permits, we shall continue another session tomorrow, right? So let's all get prepared. And today is Monday. We shall have our session on trade settings. So I urge you to get prepared, to be there on time as well, so that we can all learn together. All right, so let's end here. We shall meet again in the next session. And I wish you all the best. Have a good day and a good trading session. Okay, bye.